Right. So Lars, what do you think? How long can we keep this audience
engaged
from rushing to the buffet?
Yeah, I think it's in our hands how long you have to wait until you get food.
Right. No, so we'll try to do our best to make this entertaining. Just maybe first, Yokoy, you've heard of the company in a few words. Spend management solution created in 2019 here in Zurich. We'll talk about the founder team later. Did a seed investment with Six and Swisscom Ventures in early 2020. A Series A with Balderton and Left Lane in 2021. And just closed 3-4 months ago the Series B with Sequoia Speed Invest and a few other investors. So really an interesting story how fast they've been going. Now, Lars, would you like to say a few words to yourself?
Yes, so prior to founding Yokoy, or we were called ExpensorBot, before we did the change of the name, I was working at Beekeeper, also a Swisscom Venture funded company, where I also met my co-founders. So my background is really software sales. I always did software sales even before my time at Beekeeper, but that was really when I was entering the startup world, really with the idea of one day founding a company. So I met my co-founders there, and then we started out in 2019.
Right. And just to myself, so partner at Swisscom Ventures, I led the investment in Yokoy. I do fintech investments, education, technology, and quite a lot also in robotics, the spin-offs from ETH and APFL. Prior to joining Swisscom Ventures 6 years ago, I co-founded VC in Paris, where I was for 8 years. 2 fund cycles, essentially. And before that, I've been in industry with ABB and Alstom for about 15 years. Now, just, tell us the founders. You said a few words about Yokoy. You've been a Beekeeper. Phil, the CEO, has been a Beekeeper. How did you guys come together, and what's the story?
Yeah, so the idea came originally from Davis. So he's outside of Beekeeper. He has a background in physics, quantum physics. So he came up with the idea of, it's not a very new thing, an expense management tool. There was Expensify before and SAP Concur. But really the idea was to apply artificial intelligence to automate the whole process. So Davis came up with the idea and asked Phil and Thomas, and they approached me. And we got Melanie on board, which is a friend of Davis. And then basically what we said is we will just try it out. We will give ourselves half a year. And if we will not make it, then we will just put it in the bin and start the next company, basically. So yeah, we were like very blue-eyed, how you could say, founding the company. And half a year later, we entered COVID. So it was maybe not the best time. But I think in the end, and that's why I love all kind of companies that really focus on automation, because in the end, even if you're in an industry that is heavily hit by COVID, you can still win with the automation aspect. So basically, that's when we got together and we started the journey.
Okay, that's great. And then pretty quickly, you said about, what was it? Yeah, you founded in March or April. End of the year, we started discussing about the seed round. You had 10 customers or 11. No, I'm still not sure whether it was 10. I think it was 11, but one was not onboarded and left again. Yeah, sure. But you had 10 customers at the time. I think ARR was around 100,000 Swiss francs already, so actually quite interesting with 10 customers. Why did you not go to angel investors? Why did you come to us and other VCs, Six, of course, as well?
That's a great question. We found out really quick in the beginning that our ideal customer profile is more in the mid-market and enterprise space. So back at that time, specifically, we were talking to a big organization in Zurich, near to the zoo. I can't name the name of that organization. So we were talking to them, and what we found out is that if you speak to large organizations or larger organizations, they do not know the the angel investors or smaller VC companies, and you get much more credibility if you come up with a name like Swisscom or Six. And that was basically for us the reason why we really pushed for getting a name like Swisscom and Six on our slide deck to show, hey, we're backed by two very well-known Swiss names.
And that helped you then in the further development?
It helped a lot, yes.
Yeah. But it was interesting. I mean, you were already, I mean, for me, one of the key reasons why I invested at the time was, of course, you as a team. You were an experienced team. You were not sort of, first timers. You had your startup experience, all of you essentially in the team. But still, you hadn't founded a company before. So when we went into term sheet negotiations and later investment agreement negotiations, that we could feel that. How did you? What's your conclusion from that episode?
So Series A went faster, and Series B went super fast. So you get experienced along the way, and we were just joking about it before. I think the key thing to share here is to get a good lawyer or a good team of lawyers and spend that money on good lawyers to accelerate that.
Or at least as good a lawyer as your investor has.
Yeah.
Because you were on a budget lawyer and we were not.
Yeah, I mean, we didn't have a lot of money back then.
Exactly. No, that's true. Yeah. Then post-investment, I joined the board. And maybe I have to just outline also our investment hypothesis. So when we met Yokoy, of course, we did quite a lot of market research. There are tons of expense management solutions in the market, and obviously it didn't take us long to see that as well. What we found interesting, after I think we did around 30 calls, reference calls with competitors as well, or ex-heads of sales at competitors like Raidu and Concur and so on. And what we realized is that the positioning of Yokoy in the enterprise, so mid-market to enterprise space, there were quite not many competitors, and particularly not in Europe, with the exception of Concur. There was maybe Raidu. There was no one really in Europe. So we saw our investment hypothesis was, there is some room in Europe to build, maybe a number 2 in Europe, with a focus on DACH. But very quickly after we invested, you already looked to expand outside Switzerland. I think that was the second board meeting where you came up. We said, we have a great guy, Austria, we want to open an office in Austria. I said, gee, they're going fast. Why did you go so fast? What drove you?
Yeah, I think, and that is also one of our values at Yokoy. We want to be the best, and we want to be really, really fast. So we do not want to lose any time to scale. So for us, it was really important to already have a proof that Yokoy is able to expand into another country. And the reason why we chose Austria was next to the guy that we knew there, Stefan. So he's still our country manager in Austria. We found out that Austria is a very, very complex country in terms of expense management rules. So illegal requirements from the government. So we decided to go into Austria and use the features that we built for Austria also for Germany and for other countries. So it was really to get the foot into the water and try it out. And I think we were quite successful for like the short, we were just like, we just got the funding basically, and then we went to Austria, and that turned out really well. And then from there we went to Germany. But as far as I remember, you were not a huge fan of it, right? Of the fast expansion.
I mean, for me, it was a new experience. Quite often have to push founder teams to go faster, and in your case, I was insisting on having, particularly then on Germany. I said, why don't we try to summarize what we've learned from the Austrian market entry, and that was like 3 months experience, so not years of experience, to build sort of a playbook for the German market, which of course is another challenge. And so yes, exactly. I mean, I wasn't fully comfortable, but the company was well funded. So we weren't taking huge risks. We were also, in Austria we had hired one or then a second person. In Germany we started also with Ben, with the first person. And then took it step by step. So step by step in few months, but still, that was. I mean, now you have also expanded to the Netherlands, the third office. I mean, you guys, you're just charging at it. How does that work in your team? I mean, is Phil pushing you all the time, or is everybody pushing? I mean, what keeps the pace?
Yeah, so I mean, you know Phil very well. So he is a very pushy guy, and that is also really good because we're all pushing, and we're all pushing towards the same direction. And as I said before, I mean, when we started the company, we already had in mind, like be the best and be the fastest and win very, very fast. And I mean, of course, it's a challenge because also for us, I mean, it looks super successful, like from the outside, but we also had mishires. We also had, we went into countries too early. The product wasn't ready. But yeah, I mean, it was just not an option for us to stop, right? We wanted to have more customers, more sales, then also expand within our customer count. So we were always hiring, based on where we wanted to be as a company, and always also had in mind that when you start hiring people, that you also need to bring in more revenue, right? You always need to have a healthy ratio between the people you have in your company and the revenue stage you're in. And we also communicated very open with the teams that we build up that they need to deliver revenue, and otherwise we will either close the office or hire a new team, right? And of course we were pushing them, but we were also helping a lot. We also went on site. We were in Germany, in Austria, in the Netherlands, and really helped building up the team and apply what we learned from the other expansions, and also built a great playbook. Tobias is, by the way, also somewhere in the audience. He did a lot of work there.
Yeah, and then just, I mean, to again, as board member, you're of course delighted when you see. I mean, we've opened the German office last summer. I think Ben joined in June, yes. So then hired a few people, and now in the first quarter this year, already half of your new bookings are coming from Germany. So this is really incredible. I mean, you've essentially within 6 to 9 months you have reached the level of the Swiss sales in that new market. Right? Yeah,
absolutely. And I think what is super interesting to see is how fast it can go. That a new market. Beats your home market where you have connections and like also your investors are very well connected there. And B, also, I mean, we did quite some product development since you guys invested. We launched the Yokoy card in Switzerland. Then in Europe, we launched invoice management. And now also what we see is that, the tickets get also bigger. So for prospects. So we're now selling a full spend management suite, and what we also see is the potential that we have with invoice is much higher than the potential that we would have had only with Yokoy expense, right? So also when like the big deals that we have in our pipeline now, they are really heavily focused on invoice automation.
That's great. So maybe it's a good moment to open up also to the audience. I see the clock is ticking down. So questions from the audience?
Thank you. Quick question. How are you managing now the whole business in this environment? We have heard earlier about the challenges, the microeconomic. So I would love to hear your perspective. Thank you.
So for me, okay. Yeah, I mean, so I think, we were lucky, right? Because we just closed the Series B round when the world was still okay, or even in the highest high. Of course, now we have to, now it's very important for us as a company that we invest the money very, very wisely, right? Because it can take 2 years, 3 years until the market is again on where we are today. And that's exactly what I was mentioning before. We are still hiring and we're still growing the business because we do not want to stop. But it's like, if we see that something is not working, we need to take action, right? And we need to have this healthy ratio of people versus revenue. And thanks God, like from the business side, we do not feel the recession in the markets that we are in. So companies are still heavily focusing on automating things. And I also believe that even if, also harder times come for the companies that we are selling to in Europe today, I think we even have a bigger case because they need to get rid of people because they do not have, the budget for it. And then they leverage technology for that. So I really believe in that, and I see it also as a huge opportunity. And for us now, with the funding that we have, also acquisitions get quite interesting. And it's also, so I'm always a very optimistic person, but it could also be that we have some opportunities on our way now of, just buy know-how, buy a new market.
Yeah, and I think, me as board member, or not just me, the whole board, we're really focusing on the SaaS metrics, really making sure with all these market expansions that we have a full visibility, how are these investments into new markets, how are they paying back? Do we see, the SaaS metrics maintaining? And Yokoy had really great SaaS metrics. That's what ultimately, attracted those investors that they have. It's also an attractive business, in the sense that your customers, you pay 1 year, sometimes more than 1 year upfront in subscriptions. So and if you're fast growing, that almost pays for your growth, particularly, we're looking at whatever, clearly less than a year CAC payback in this business. And so that helps, of course, as well. But we make sure that that we have 2 years and more of funding for the company, to finance the burn rate. Yeah. No questions? We have 30 seconds. Well, then we leave you to the buffet, 30 seconds ahead of schedule. Thank you.
Thank you very much.